Good afternoon. My name is Luke Tannen, and I'm the president and CEO of Chicago Innovation, an organization that supports local innovators across industries, big companies, and startups through a variety of events and programs. And we are also, I might add, a very proud partner and very happy customer of Wintrust. And it is my pleasure to welcome you all to the fifth installment of Wintrust Wealth Management's panel discussion series on the economy and financial markets. Today's event, Navigating Uncertain Financial Times, will focus on some of the ways in which our panelists have helped clients address the unique wealth management related challenges and opportunities brought about by the COVID-19 pandemic. Our moderator for today's discussion is Tom Zadar. Tom serves as chairman and CEO of Wintrust Wealth Management, which manages or administers $35 billion in client assets across 4 operating business units, which are asset management, trusts, investments, and 1031 exchange. Our panelists for today are Mary Ann Korenik, Kristen Beal, and Mary Cunningham. Starting with Mary Ann, she is the CEO of the Chicago Trust Company. She has over 24 years of wealth management, trusts, and estate planning, and fiduciary experience, and frequently speaks on the topics of trusts and estate planning. Mary Ann is also on the board of the American Red Cross Illinois and a member of the Chicago Estate Planning Council. Kristen Beal is a financial advisor with 14 years of experience providing comprehensive wealth management solutions to individuals, families, businesses, and organizations. She serves on the board of the Ruth Page Center for Performing Arts, as well as the advisory board for Prairie State College's business department. Kristen also volunteers with many organizations, including the Garfield Park Conservatory, Museum of Science Industries Black Creativity, and the Ingalls Hospital Foundation. Lastly, Mary Cunningham is president and CEO of Chicago Deferred Exchange Company. Mary has had direct involvement with tens of thousands of tax-deferred exchanges across a diverse group of clientele and assets over the past 25 years. She's actively involved in the Federation of Exchange Accommodators, or FEA, which is the National Trade Organization for Qualified Intermediaries, and currently serves as co-chair of the FEA Government Affairs Committee. And with that, it is my pleasure to turn things over to you, Tom.
Thanks, Luke. And welcome to our audience and to our panelists. It's really great to be here with you. Mary Ann, Kristen, Mary, we're going to get right into it. The COVID pandemic has had ramifications on nearly every aspect of our lives. In each of your businesses, this has resulted in significant disruption and uncertainty. So let's start with how that has impacted our employees and our clients. So Mary Ann, you stepped in as CEO of our trust company about 18 months ago, just 2 months into the pandemic. Thank you for that, by the way. How has working from home and remote communication affected your employees and your clients?
Thank you, Tom. Well, actually, it's been 18 months, 6 hours and 12 minutes, but I've enjoyed every moment of it. Some of it's just obvious. Communication is a key. I think of 2 other things: connectivity and empathy. On the communication side, we made the example of everybody just basically say, over communicate with your clients. Make sure you're touching your clients, particularly elderly clients who were extremely isolated during the pandemic and suffered from loneliness or the inability to spend time with their families. So that added touch of trust officers reaching out to their clients proved to be very, very important during the pandemic. With regard to the employees, I can't say enough. First of all, being their new leader, I had to take the time to get to know them, and we scheduled one-on-ones initially for all 50 employees, getting to know their wants, their wishes, their dreams, not just for themselves and their families, but for the company too, as we take this company into the future. We did a lot of fun things to feel connected. We did a lot of Zoom happy hours, trivia. We even did a virtual cooking demonstration where I made soup for everybody online, which was a lot of fun.
Which I attended, by the way, and was fantastic.
Needless to say, there was also a happy hour associated with that, but it was a lot of fun and it really helped keep the employees connected. On the client side, it was very imperative in our business, like a lot of our businesses, to make sure things keep going. One example, our land trust department, just without a hitch, setting up tables for signing documents out in the parking lot so clients could socially distance, but yet finish their business and make sure transactions took place. On the new business front, we really didn't skip a beat. Good example, we had a client who unfortunately lost her husband and wanted to interview us as successor trustee. But she wanted to interview us in person. So we pivoted and moved a bunch of furniture around in one of the branches, made sure we were all socially distanced. She interviewed us along with her attorney, and thankfully we won the business. Just a few examples.
Excellent stuff, and a lot of learning on the fly, Mary Ann, for you and your team, and really servicing our customers so well. So thank you for all those efforts, and we continue to do it today, as you know. So Mary, let's turn to you and the Chicago Deferred Exchange Company. That's a mouthful, or CDEC as we like to call it.
Yep.
First, Mary, can you explain to everybody what CDEC is and does, and then talk a bit about how the pandemic has impacted your clients and how you serve them?
Yeah, sure thing. So CDEC, we act as an intermediary for commercial real estate investors who are doing like-kind exchanges or Section 1031 exchanges. That's an old provision in the Internal Revenue Code that allows an investor in commercial real estate to sell that real estate and buy like-kind real property within a very short window of time and defer current recognition of gain on the sale of their old property. So it's a very powerful tax planning tool for taxpayers of all stripes and sizes. We have a small team. We have people in New York and California and Chicago. And of course, we pivoted as well very quickly. Everyone was working remotely. But we also have a national business. And it was not often that we met our clients in person. So it was interesting for us during the pandemic that we quickly adopted to using Zoom to have sort of in-person video meetings. It was really fun to finally kind of put a face with a name or a voice with a client that maybe we've been working with for decades. We never actually met in person. So in that regard, you know, again, we didn't skip a beat either with business development. Zoom helped us tremendously.
Yeah, absolutely. Thanks, Mary. And now, Kristen, as a financial advisor, I know that you spend a lot of time with your clients. And while, as Mary Ann and Mary said, a lot of businesses have been able to maintain client relationships during this new remote environment, it's been tougher to garner new business this way, and for all of us. And you are actually an excellent business developer. I would compliment you on that for sure. Now, how have you been able to expand your business in the current operating environment?
So, really my job is to help my clients build, manage, and preserve their wealth. And so when we're meeting with new clients or even the current clients that I have, these conversations during the pandemic were just much more frequent and robust because they were tackling so much more. They were planning for, their investments, but also possibly selling a home while caring for an elderly parent. So there was a lot that we were addressing during our meetings. So we were meeting more frequently, and also so thankful for Zoom and Teams to be able to have that communication virtually. That actually allowed us to also, in terms of meeting new clients, do more panels like this, and to have an even more national presence to get referrals from clients through their siblings or friends. So it was really, using that word pivot, a good pivot though, in terms of the business opportunities and being able to assist our clients on a deeper level.
Yeah, so it's ironic, this remote environment allowed you actually to get closer in many cases to your clients, yes. Which I think we've all seen to some extent. So good stuff, Kristen. Thank you. So let's turn to the audience and jump into our first question. If you could pull that up, Paul, it'd be great. And I'll read that for our panelists. The pandemic has impacted our lives in many ways, as we noted. But which are the following items that are most concerning to you right now at this stage of the pandemic? And we've got four here. One is more of the personal challenges, the remote work and health concerns, things that we're very familiar with this pandemic. The economic recovery and situation, we've seen a lot lately, inflation, the inflation word has popped up quite a bit, supply chain issues, labor challenges. Is that the most important issue to you? Legislative changes, we're going to talk about Washington. Lots going on there from a tax and stimulus perspective. And then finally, the markets have been very active. So take a moment and click one of those radio buttons, and we'll come right back to the polling question in a minute. So let's pivot to the economic recovery, because we have seen a change here in the last year or so. While the audience weighs in, we'll move on. Lots of challenges and opportunities have been created in this recovery phase of this pandemic. And Mary, I'll turn to you on the real estate front first. Since the economy opened up and began to open up, which was probably about a year ago, the real estate market went from not much going on to really sort of bouncing back strongly. So how have you helped your clients deal with the rapid change and the most recent boom in the real estate market?
Yeah, a couple things I would say at the outset, at the beginning of the pandemic, we were talking to our clients a lot about the potential for the IRS to give them some extensions on their time periods. When you do a 1031 exchange, you have very specific time periods you have to meet. And in fact, the IRS did give a little bit of an extension to our clients, but that has since expired. The difficulty our clients were having was getting in to see properties, trying to evaluate the values of properties during this really uncertain time during the sort of recession. Now, business has come back tremendously and the transaction volume is really staggering. What we're hearing from clients about now is many of them want to get out of the active management of real estate, older investors. They don't want to deal with tenants any longer. So they're coming to us and asking us if we have other solutions that we could point them to that would give them more of an armchair investment. And in that vein, we've been able to work with Wintrust Investments on a number of occasions to direct them to a platform where Wintrust Investments has something that's more armchair, like a Delaware statutory trust. So it's been a really interesting, again, we're using the word pivot, interesting pivot in that regard.
Yeah, absolutely. And it's been really good for our clients.
Yeah,
On both
it's been
fronts.
great, yes.
Kristen, can you speak to that? And, not only the DST comment, but also, how are you helping your clients sort of navigate through this economic recovery?
So it's really my job to provide insight and guidance to clients on so many different areas that affect their finances. So we do have clients that took advantage of the 1031 exchanges so that they could be able to take a step back, especially the elderly clients, so that they weren't going to collect rent checks, but still wanting that income. So we look for strategies to assist clients so that they can live their lives and accomplish the goals that they want. And so during the pandemic, one of the things that I think initially surprised people was how the economy continued on and the markets did really well.
Yep.
And wages actually went up also. So people had more cash on hand. And so a lot of the conversations we had were what to do with that cash. And I always highlight to clients, make sure that you have, if you're working, 3 to 6 months of your expenses. First of all, know your expenses. That's really powerful. Once you know what you're doing, you can pay yourself first. I always give this example of how one year I was looking at my own expenses and realized I was spending like $2,700 a year on Starbucks, which is, absurd.
I don't think you're alone on that one.
So, it was kind of like, okay, make your own Starbucks at home, but just automatically start saving that money because we're creatures of habit. And so once you know what your expenses are and you can put that money towards savings, you can start looking at investing for the long term and for your goals. So, making sure everybody's maximizing as they can into their retirement plans, and then knowing your risk tolerance. So taking that risk questionnaire, making sure your objectives are aligned. Because what ended up happening during the pandemic, and even now as the markets keep doing well, is people get up out of alignment with their goals and their risk tolerance, I should say, so that they're more aggressive than maybe they should be. So you want to make sure that you're rebalancing back to where you should be, because we have no idea when this will change. Other things that we talk with clients about were really, obviously we were in a pandemic, there was a lot of loss of life and people were struggling with that, and then looking at their own mortality. So making sure that their beneficiary designations were in place, and looking at long-term care was something that we spent a lot of time talking about. So, we just really try to be there for our clients to address whatever concerns they have so they can sleep at night. And we're lucky that we have partners like Mary and Marianne, the trust company, to facilitate that also.
Thanks, Kristen. And your planning comments, I know, segue well into the way Marianne looks at the world. So Marianne, can you share with us some of the opportunities that you're seeing in the trust and estate world for your customers, especially to Kristen's point, as this economy has hung in there and we've seen markets be really, really strong. So there's more cash on hand than we had, people would have ever expected coming out of a pandemic.
Absolutely. Yeah, it's been interesting too, because in our business, it's kind of doom and gloom. We talk about what happens when somebody becomes incapacitated and then subsequently passes away. So those conversations were normally tough, but they came to the forefront during the pandemic. As Kristen mentioned, our mortality was called into question. So for us, one thing that we saw a huge uptick in was a request for distributions from irrevocable trusts that maybe were set up by parents or grandparents for folks who lost their jobs, particularly in the hospitality industry, airline industry, those industries that were really hard hit by the pandemic. They were able to request funds from their trust accounts, working with their trust officers, and it really kept them and their families going for quite some time. So they were the ones that were very fortunate. On the other side of the coin too, we had clients that accumulated a lot more wealth due to the markets and then due to business owners selling, a lot of liquidity events. You know, cash is also an asset. So Kristen touched a little bit upon estate planning and titling. So we always made sure to get in front of clients to make sure if you have new assets and you have a trust, make sure those assets make it to your trust. Really, really important to make sure that the plan gets implemented the way that you intended it to do. And then of course, for our higher net worth clients, we have clients kind of rushing to get new strategies in place due to the pending legislation in Washington, which I know we're going to touch upon a little bit later, but we do have clients that are sitting on cash, whereas they would have spent it on travel or other luxuries, now using that to utilize more advanced planning and spend a lot more money, frankly, in those types of fees for themselves and their families. It's usually the number one pushback we get when people are putting a plan into place, like, how much is this going to cost me? And I said, well, it'll cost you this much on the front end if you do the planning. If you don't do the planning or you spend this much on the front end, it's going to cost you this much. On the
Save
tail.
this much.
Yeah, and just the whole controversy of with families and how families change after post-death. Do the proper planning and spend a little bit more on the front. I think that goes for a lot of things in life. Yeah.
For sure. Thanks, Mary Ann. And as you said, we're going to talk about Washington in a minute, but let's go back to our first polling question and see what the results look like. So Paul, if you could pull that up, I'm curious to see where we finished up. So again, for the panelists, the question was: the pandemic has impacted our lives in many levels. Which of the following items is most concerning to you right now? And it looks like more than half, 53% of our respondents say the economic recovery is really the number one concern, followed by legislative changes, then personal challenges, and then the markets. And it's interesting. Had we asked this question about 12 months ago, it probably would have been much more about the personal challenges. But as you have all alluded to, people have adapted to this new environment pretty well. And we've got some concerns out there with the economy. We mentioned inflation pressures, supply chain issues, labor shortages. So that's the top of the list for our customers and their concerns, which it makes a lot of sense right now. So in that light, let's talk about something else that's going to impact the economy, and that's Washington. There's some really large spending proposals in Washington right now that are being debated. In fact, just yesterday, the $1 trillion infrastructure package was signed by the president. And there are other proposals still being discussed that will that need to generate tax revenue to pay for these packages and the bills that are on the docket. So let's talk about the challenges and opportunities presented by the proposed tax changes, as well as the pandemic relief acts that have already taken place. So I'll start back to you, Mary Ann, and just ask about recognizing the uncertainty in Washington. How is your team counseling clients with respect to planning, just thinking about some of the things happening coming out of Washington, pros and cons, as they look to position themselves in their estate plans?
Yeah, first and foremost, uncertainty is a key word here. We don't know what Washington's going to do, and we certainly are counseling our clients on that uncertainty. But uncertainty doesn't equate into complacency. So we do have a lot of clients that are rushing to their estate planning attorneys to update their plans to take advantage of some tax advantage strategies, such as spousal lifetime access trusts, SLATs, if you will, a lot of acronyms in our business. Irrevocable life insurance trusts have become more popular now. These are aspects of the legislation that are under attack, if you will, by that legislation. We talk about estate tax exclusion. The proposed legislation has it from 11.7 currently going down to as low as 3.5 million, possibly.
Right.
And then if nothing's done in 2026, it will sunset back to 5 million, which will impact, thousands and thousands of families throughout the United States. That being said, it's important that families understand their own plans. So it's one thing to put the plan in place. It's one thing to get ahead of it. It's one thing to build in flexibility within their documents, but utilize your professionals as well too. We offer what's a free estate plan review for our clients, and many clients take advantage of it. And many attorneys that we work with like that because they like a second set of eyes. It's one thing to draft a document. It's another thing to be the trustee and administer that and really go through with clients in real time. Okay, this is what this document says. In real life, this is what's going to happen when you're not here for your family and loved ones. And they really seem to appreciate that. So do attorneys when they're drafting, because we ask them to build in more flexibility, specifically when they're having a corporate trustee. So that part, there's just so many opportunities right now. I know, I'm speaking with a lot of attorneys that we work with. They're all canceling their New Year's Eve plans because they're all working day and night to try to get these new estate plans in place. It's not a time to really panic either because we're really unsure. And, so long as you have your capacity and the ability to make changes down the road, nothing's ironclad. We always tell clients to be flexible within documents. And again, really important, Kristen pointed this out, once you put that plan in place, the homework isn't over. You have to communicate. You have to let people know who the people in charge are, but you also have to have clear understanding of what that means. And, titling assets is the #1 mistake people make. They get this plan in place, they're all proud of themselves, and then they forget that the Florida
It's on
property,
the shelf.
yeah, it's just sitting over there, and and that could trigger something that we all hate, and that's probate. So it's interesting to listen to clients from several years ago. No, I don't need to do anything. And now, obviously fear is a motivating factor for us in a lot of things.
Mary Ann, just to go back to one thing you said, so estate planning attorneys, a lot of our clients have their own attorneys, and your team will work with them, right? It's not
Yes.
like you need to bring in somebody else. You'll work closely with somebody's existing attorney.
Yeah, we really pride ourselves here at the trust company. We don't want to disrupt your existing relationships, particularly because they may have been working with the family for years and years. Similar with accounting firms, I think that's a differentiating factor with us too, because we'll work alongside. We look at your financial picture, much to what Kristen talked about earlier, as a team. So we're on the same team with your attorney. We're not here to change that aspect unless you ask us to, but because we have a lot of resources. And that's a relationship that we really pride ourselves in.
Respect.
Yeah.
Yeah. Excellent. Okay, thanks, Mary Ann. So let's go back to the audience here for our second polling question of the afternoon. And Mary Ann touched on the federal estate tax exemption. And there is a lot, again, as Mary Ann noted, there's a lot of uncertainty here. This is not cast in stone, but there is a proposal to reduce the estate tax exemption to $3.5 million from the current 11.7. So it's a pretty significant change. So the question to the audience is, how many of the 128 million US households would potentially be impacted by this? So you've got 5 choices there. So take a moment to click one of those radio buttons and we'll come back to you in a minute. But again, this is the federal exemption. So Mary Ann, you want to touch on some state issues?
That's a good point. So despite the fact that the federal exemption is pretty high, if you're an Illinois resident, Illinois isn't talking about changing. It's only 4 million. Which may be a lot to many folks, but for a lot of folks that are above that 4 million, you're still going to have be subjected to estate tax without the proper planning. So we do there. You have to be state specific when it comes to estate tax. That's a good point. A lot of people forget about that.
And again, our trust company is a national trust company, so we deal with
Right.
folks in every state.
We do serve in every state. Yes.
Yeah. Okay, great. All right, well, thank you. So while we wait for the audience to come back to us on the polling question, let's pick up on the response to the changes and challenges in Washington these days. So Mary, Washington,
Hi,
one of
Tom.
your favorite subjects. What impacts from proposed changes to the tax code have you seen in your area, and how have you handled them with your clients?
So no impact yet, thank goodness, but I will say that before he was president, current president Biden, as a candidate, put out a tax policy piece proposing to cap the tax deferral available under Section 1031. And then when his official budget was released in May of this year, there wasn't in fact a cap included that would prevent you from deferring more than $500,000 of tax per taxpayer per year when you're doing a like-kind exchange, or up to $1 million for a married couple filing jointly. This obviously alarmed us because that would wipe out a lot of our business. And we had recently beaten back a proposal from the previous administration that wanted to eliminate 1031 entirely. So what we're doing is talking to our clients, talking to legislators, making sure everyone knows that commercial real estate took such a hard hit during the pandemic that capping or repealing 1031 at this point would just further hamper the recovery of commercial real estate and likely cause a lock-in effect in real estate. So people would be less willing to sell, and just would be that bad for the economy all the way down the chain. We do conduct a lot of continuing education programs for our clients, for attorneys, investors, CPAs, advisors. And this is always the first thing that we talk about. It's on the top of everyone's mind at this juncture. Is 1031 going to be there? And through our trade association, we put up an issues website that you can go to and look at. It's 1031buildsamerica.org, and you can very easily send off a quick note to your elected representative, letting them know that you support 1031 the way it's written. As you probably know, the Ways and Means Committee put out their markup of the Build Back Better budget reconciliation bill a couple of weeks ago. There were no modifications to 1031, so we're going to be watching the Senate closely to see what happens in the coming weeks.
Well, good work.
And we're hopeful.
Yeah, as you say, knock on wood, and we're going to keep fingers crossed on all
Not
those
over till it's
things.
over.
Not over
Yes.
till it's all that
Yeah.
stuff, but we're feeling pretty good about
Feel
things.
pretty
And
good right
and
now.
as we talked about before, it just doesn't seem like a great idea as we're trying to get, bounce back from a recession to be
Yes.
putting any kind of handcuffs on real estate and real estate transactions. So hopefully that continues to go in the proper direction for us. So thanks, Mary. And Kristen, we think about investors, capital gains taxes and income tax, increases are all kind of on the table right now. As we talked about, we're not sure. Nobody's sure how this is all going to shake out. It seems like every day there's a different proposal coming out of Washington. So lots on the table, but in light of that uncertainty again, how are you counseling your investment customers about what they should be doing?
So just to kind of highlight what Marianne said, we are really partnering with our clients, CPAs and accountants, going to them for guidance. Any strategies that we put in place are always meant to try to protect our clients from a tax standpoint. So we want to be tax efficient, but at the same time, no client has ever really called me and said, thank you for the losses. So I know everyone's really worried about these things. We can't control what's going to happen in DC. So we want to make sure that we have a solid strategy in place. So looking at rebalancing so that throughout the year when things are down, we're realizing those losses. And also making sure that in taxable accounts, we're using muni bonds and things like that. And then working with the accountants and with the trust company to make sure that if it makes sense to gift your RMDs for those clients that can do that and don't need the income, that they are doing that, because that's a good strategy to a charity. And then also any highly appreciated stock that can be donated also and gifted to charities and even transferred to loved ones, which will help. And so we really just want to stay educated on the topic so that we can keep educating clients. Because that's really where the empowerment comes from. But I just always like to highlight that, if you have capital gains, that does mean that you make money. And if your wages go up and you pay more in taxes, that does mean that you're earning more. And so, there's a flip side to everything. And so we just want to manage it as best. That's my job anyways, to help them manage it.
Counsel.
Yeah, and just to piggyback off of the charitable aspect, that is the one area that Washington's not touching. And so you piggyback that off of the accumulated wealth aspect that we discussed earlier, and it gives clients a tremendous amount of opportunity to start refocusing on charitable giving. Oftentimes people think, writing a check is the only way, and appreciated stock is a great way to give to charity. Obviously, setting up a donor advised fund, very economical and easy way to donate to charity, take advantage of the tax ramifications there. But there's also some pretty neat strategies when it comes to trust. You could set up a trust to benefit a charity during your lifetime that ends up with you and your loved ones when you pass away, and vice versa. You could set up a trust for your own benefit that benefits a charity in the end, and you have a lot of tax advantages to setting it up that way. It's excluded from your estate for estate tax purposes. So there's just a lot of different ways. Foundations have become really popular, and we work with a lot of families that have foundations and vetting out newer charities. As a result of the pandemic, we've seen a lot of charities pop up that deal with social injustice, for example, a lot of charities dealing on the medical side, blood donations, and then a lot of charities too that qualify now to assist families that have had a tremendous impact in the loss of loved ones during the pandemic. So we do a lot of that vetting for our families that have their foundations. And, there's just so many different ways that people don't think about. They just think about the cash aspect of it.
Yeah, good stuff. A lot of excellent tactics. Thank you, Mary Ann and Kristen there. All right, so we'll pause and take a look at the response to the second polling question. So Paul, if you could pull up the results, see how people voted here. Okay, it's actually pretty balanced. So it looks like 26% and 25%. So most people thought 1,000,004 people or 2.2 million households would be impacted. The actual answer is 3.8 million households would be impacted by this. So almost 5 million people would be impacted if the estate tax exemption is lowered from 11.7 to 3.5. So it's pretty meaningful impact across the country if this does, go the way of this proposal. Now, again, as we've said many times, it's not clear what's going to happen, and we'll all keep a close eye on this, but significantly different than where we are today. And really goes back to what we've been saying, that you need to plan for these things and just make sure you leverage the resources. In our case here at Wintrust, but also the partners that we use, whether they're attorneys or CPAs and the like. So planning, I guess, is the message from us today on that front. Okay, so let's shift to the markets. There's a lot going on. There's continues to be tremendous uncertainty and some incredible run in the market on the S&P 500, I think, is up 27% year to date and was up 20% last year. I mean, you think about a pandemic and you're talking about 50% increases from the bottoms. It's incredible. But it's Kristen, you mentioned, this is something we need to manage. We don't need to be complacent and just think the market's only going one direction. But not to steer everybody here. I'll take it back to Mary. In light of everything we're seeing, and what advice would you be giving as you look forward to investors and business owners in the near-term future? Mary, yours is really kind of your expertise in the real estate arena. What are your thoughts for people as they think about investing in real estate?
My initial thought is don't overpay for real estate because the market is really inflated at the moment. I mean, every day we talk to people who they just can't get their offers in fast enough. So be careful, don't overpay. Maybe capital gains rates are going to go up and you want to harvest some gains this year. That's not a bad strategy. Also think about taking advantage of low interest rates and maybe just refinance a property. But also don't get into an investment that you don't want to be in, right? In our business, it's all about deferring the tax. Don't let the tax tail wag the dog. Make sure that whatever you're doing, is it the right investment for you?
Have you seen that happen, Mary?
I think people do often sort of feel like they're just so compelled to finish the like-kind exchange and they get into something that just doesn't work for them in the long term. So yeah, it's just.
And that's where you step in and counsel them on.
Well, yeah, we would talk to them about what do you still want to be in real estate? If you don't want to be, then there's no reason to doing this strategy.
Got it. Thank you. So Kristen, this is what you're dealing with every day. What is your counsel to investors right now, especially as you see and talked about what's happened with the markets? As you mentioned earlier, some people have really gotten out of balance because the equity market has run up so much. If you did nothing, then you're going to have more equities than you had planned for originally. So can you just share with us some of your counsel and some of your thoughts in light of what you're seeing and what you're doing with clients?
Yeah. So first, taking a step back, I'm going to go back to what I said earlier about cash. And just making sure that it's not even just cash, but every dollar that you have is accounted for. So that means actually knowing your net worth, staying on top at least annually of what your assets are and your liabilities. And then making sure that you know what you want your money to do for you. And so when I say accounted for, if it's for a wedding, if it's for care for when you're older or retirement or for travel, but have it allocated because then you're going to treat it differently. If it's not allocated and it's just kind of sitting there, then you're more likely to take more risk with it and become more aggressive. I can't tell you how many times a week I have clients call and ask me about cryptocurrency, and that's definitely not something that I'm touching. I am the foundation and the safe house. But there's so much out there. And, all I can say is make sure you're educating yourself. on anything that you're hearing. Read it, empower yourself so that you're in control of those decisions, which is really my job with clients. So, we are having conversations about, once again, because so much loss of life, the long-term care, and also just making sure if one parent passed away, and you still have another one here, that you are a joint owner on accounts with those parents. Also, making sure you're understanding. So we have a document when trust, it's like organizing your finances. And that literally is meant so that it writes down like passwords for emails, your wishes for what scripture or songs you even want at your funeral. And I'm saying all this to say that you need to write it down, think about it, and then tell someone where they can access this information. Because it's too many times over the last 20 months that we've been having these conversations with children that were left behind and wondering, what accounts did their parents have, or they can't access it. And so just make sure that you're really staying on top of your goals. You don't want someone else deciding what happens to your wealth after you were gone because you didn't want to address it. So we're really looking at that. The other thing I would just say, and we didn't touch on it that much, but it's another partner that we have, is just protection planning and insurance planning. As people are working, and some people are retiring, which is fine, and a lot of younger people are changing jobs because they do have more cash on hand. But disability insurance is just something that's really important because people don't really like to think about that one so much. But you've got to protect the income that you're earning, because that's your biggest asset. And then, just really, as we said before, in terms of investing, we don't know when this could change. And so you want to be able to sleep at night. So I can't reiterate enough, just making sure that you're in tune with your objective and talking to your family members and your advisors.
Yeah, good stuff. And, Kristen, we often talk about risk management as one of the main things that we provide as advisors to folks. And, it's easy to get caught up in the euphoria of these markets, but at the end of the day, our customers have objectives and they have goals, and we need to make sure that they're positioning their assets to make sure that they can fulfill those needs and those goals. So you do a wonderful job of that. So thank you. And Marianne, I saw your eyes lighten up a couple of times when Kristen was talking about planning, and especially for the next generation. Can you talk about, as you look forward, coming out of this economic recovery and looking at opportunities for investors, what are the sort of things they should be thinking about in terms of, again, trusts and estates and just tactics? We talked about a few before, but anything else you'd like to add?
Yeah, I just want to add to the next gen issue. We saw a huge uptick of younger folks setting up plans, and their parents basically saying, you've got to put this into place, you got to put this into place. The communication aspect was key too, in making sure, to Kristen's point, what your intentions are. The worst case scenarios I can give, and we can do a whole seminar on estate planning blunders that are out there, and what people have done and haven't done that have created catastrophes for themselves and their families and their legacy. So doing the proper planning, utilizing the strategies we talked about earlier. Clients should not be afraid to set up irrevocable trusts, especially clients that have a significant or potential tax impact, estate tax wise. 65% is a big number. Even the rates as they are currently today are big numbers. You hear about, people losing the family farm over estate tax, or what Congress and Washington likes to call the death tax.
Yes.
But, you think about how these families have worked so hard to earn and achieve their wealth. Our job is to help them preserve it. So to Kristen's point, we do have a lot of discussions about pulling back. For those of you that were around 1999 and 2000 with technology stocks, you know what I'm talking about. People get greedy and they get a little bit eager and joyful, and those are all great emotions. But when it comes to investing, you have to kind of take the emotion out. So from our standpoint, and that's why the partnerships with whoever your team is, but we're real fortunate here. We've got so many resources in making sure capital gains is a huge issue, especially this time of the year. And so we work really closely, the trust officers, with the portfolio managers and the advisors to harvest gains if needed, offset those against losses. Taxes are a huge issue for trusts too, because trusts are taxed at a higher rate than individuals. So we do counsel people a lot on taking out the income if the trust allows you to do so. So there's a lot of different strategies. And then, of course, the biggest mistake I see as of late, and I don't mean to pick on business owners, but they're busy running their businesses and they're not thinking about this. So it's, again, important that if you are contemplating a sale within the next 2-3 years, get in front of your estate planning attorneys, get in front of your professionals and your advisors now to start planning those strategies. Don't wait till the last minute. The tax ramifications can be huge, and some of it's completely avoidable.
Yeah, well said, well said. And we have seen a lot of activity with business owners of late. You know,
Yeah.
Mary mentioned it. We've got, you know, sky high prices across the board, and fortunately, our bankers are working with a lot of them to help them navigate through this process, and have partnered with you and others to make sure they're thinking about the state and the beneficiary ramifications of those decisions. So all very good stuff. Well, thank you, all three of you, our panelists
Yeah.
today. We appreciate it. Thank you to our audience, and that's it. We're run out of time today, but I wanted to note that as we've said previously, we'll conduct these panel discussions every quarter. Our next session will be in early February, so lots of interesting things probably coming out of Washington by then. So we look forward to that conversation. But in the meantime, a recording of today's event will be available on Wintrust's YouTube channel, as well as a transcript is going to be made available on our website. So thank you again. Continue to stay safe and have a great rest of the week, everyone. Good night.